Is raising capital getting you down? Feel like a circus act trying to attract the right investor? We've got you covered.
How many times have you heard, "Thanks, but no thanks"? While it's pretty awful to hear the word no, it can be a powerful motivator, as long as you don't give up. We spoke to the experts.
1.
I'm very passionate about building products and bringing something useful for people, but raising funding is very difficult. It's brutal. You know, they say investors, they're always looking for a reason to say no. And then during the fundraising process, what you do is keep addressing their concerns so they run out of reasons to say no. And sometimes they could say no because of bad timing. Then you could always go back and see if they're interested later. We did successfully raise funding both from the private investors, the traditional way, as well as from non-traditional funding source. So from the private investors, we raised a small amount of funding, and that experience is quite similar to what most entrepreneurs experience. It's like lots of no's and a few yeses, and yeah, you found investors that align with your goal and believe in you.
2.
Investing is really math. Well, I think a lot of people actually go out to raise capital, and I don't actually think they're prepared. And so I think the knack in the industry is that it can be really challenging to raise capital. The reality is, if you have the right data for the business, if you've actually truly prepared all the way, I don't think raising capital has to be that difficult. And so I think, from my own experience of raising capital, as well as then, helping a lot of clients within our portfolio raise quite a bit of capital for their growth and scale, it normally comes back to one thing. Does the data make sense? Does the IRR, internal rate of return, make sense, for the investor? If those two match up and the risk tolerance is priced appropriately, raising is easy. I think the problem as entrepreneurs is we get a little egotistical. We usually think our business is worth more than it actually is. And the math just doesn't work.
3. I've found that when entrepreneurs and founders and new startups are trying to raise capital, it can be hard to come by when you're pursuing outside resources. That's just the reality of it. It's hard to find that unless you have that next novel idea that comes along, and there just aren't that many of those that come along and are able to capture the hearts and minds of investment groups. And so what I've found over the years is that most funding for most small businesses comes through either their own capital that they've saved, friends, family, and people who believe in you as the entrepreneur, as that founder. And so most of the time, that's where I found most capital tends to come from. If you're not trying to secure a loan, well, it can be a great resource, but you have limitations based on your personal balance sheet, how much debt you may currently have, or what your current asset situation looks like. And so it's oftentimes easier to find those that are connected to you. They're investing in you because they believe in your ability less than they do the actual concept or the business model that you're looking to start. 4.
Everybody's founder story is going to be a little bit different. And so let me tell you 2 different quick stories. First of all, I had a mentor that had been a mentor of mine since 2005. So for 7 years, he had mentored me. And he finally came to me and said, "It looks like you want to start your own company." I said, "Absolutely, but I don't have any cash." And he goes, "If you can raise half the money, I will match it." And so with his backing in friends and family round, there you go, I was able to raise the entire amount, his half plus friends and family for the other half, in 48 hours. We were oversubscribed. People were like, "Oh, Dan, if you're going to do something, I'm in." And it was very humbling, but it was great. Raise double or more of what you think you need. And that's what he told me. And I did that, and it still was barely enough. We had at one point 13 different credit cards on a spreadsheet. And on that credit card list, there was the credit card, whether it was mine or my co-founder's credit card, the limit on that credit card, and then the day that it looped every month. So if it loops on the 18th, that means we want to max that credit card out on the 19th, which means it's due the following 18th, and then you have the grace period. You get like a month and a half of interest-free float. On these 13 cards, we had about a $350,000 line of credit, so to speak, on 13 credit cards. Terrifying. If you ever go belly up, all that is on your own personal credit. But we did it, and it worked, and now we don't have to do that anymore. But we lived that way for many, many years, and that forces you to learn to watch every dollar as it's going in and out of your company.
5.
When I was raising capital for Fran shares, it was really myself and a pitch deck. And I knew I needed to raise at least $1 million in order to properly build this company. I reached out to over 400 different venture capital groups and maybe had 3 responses. And those led to very quick conversations of interesting idea very early for us. And so I had to think how else to go raise money for it. Because frankly, when you use the F word that is franchising, a lot of venture groups don't really jump for it. It's not as sexy as AI. And so I decided to go change my audience to start off, and I reached out to angel investors. Angel investors who had experience in whether it was franchising or finance or real estate. And the idea really took hold, and it was also proving the product, is that these are types of people who would invest on the platform too. And so in about a month, I raised over $500,000 from different angel investors. From there, I decided to go back to the venture capital groups that had turned me down before, because knowing my audience, I know that once you've gotten buy-in from other people, they're excited to hear your story. So I reached back out to all these venture capital groups and started pitching them. And basically, it was still a lot of the same thing, but very key points. Fantastic idea. You're clearly the guy to do it with your background, but I don't know anything about franchising. And so I'd always follow with an ask, which was find me someone who does. And eventually I got introduced to Chicago Ventures, and they were coming off 8 different billion-dollar companies that year, from Cameo to Spot Hero. And so I was surprised that they were interested in us. And it turned out their founding partner was part of a group that rolled up 500 KFCs and flipped it to private equity. So I'd found my investor who understood what we were building, and then we were off to the races after that.
The Best of Business Show is brought to you by the BASA Awards. The BASA Awards exist to recognize, reward, and promote exceptional small businesses. We run 4 award programs: Best of America, Best of Australia, Best of Canada, Best of UK. Remember, it's strictly for small businesses only. Nominate your business today.